Welcome to Stock Charts Trading. Today we're going to be talking about what I hate about the Wolfe Pattern. And so right here we have a Wolfe Pattern, and it basically is developed by higher highs, higher lows. And so we can see that we have a low right here, number 1. We have a lower low right here, number 3. And we have a break of this little channel right here, number 5. Making an even lower low, but because it broke down below that support level, it's basically saying this is your buy signal. Once it crosses back above, then you would get into that trade. Now, what it does is it takes the highs and it says, here's the high, and that's number 2. And we're going to take from the low right here of number 1 over to the high of number 4. And we're going to extend that out, and it's going to give you a resistance line. And so once you hit this resistance, right, you go from this low right here, which is support, up into this resistance line. You then take your profits, because the anticipation, what happens after resistance, is it should fall back off. And so it's a great trade because it gives you support and resistance of where to buy, where to sell. But I want to develop a little bit of real life trading. What happens when you apply this simple strategy to the stock charts? All right, so here we go. We have a low right here. We have a lower low. We bring that diagonal line into this candlestick right here. It drops below the support line, and then it comes back above. We take from the first position and we bring it over, and you can see that this trade works, right? If you got in here at $138, this is GLD, and then after just a couple days, it goes up almost 5% into this resistance. It actually breaks through the resistance. So this was a great trade for this pattern. Now, why do I not like this pattern is because you have a high right here. You have another high right here. It comes down and then goes up. And so you can see this little wick right here broke through that resistance line. And so we would take a trade to the downside, anticipating that it would come back down to this leg 1 and you would complete the pattern. So from here on down, but it does not complete the pattern. It keeps on going higher. So then what do? You say, all right, well, I'm going to get in on this high over to these higher highs. And what do you have? You have a breakout right here. And so you set your position for your target right here to come back, pull back into this so that it would make newer higher highs. But what happens? Price continues to go upward. So now you go from these highs over to these highs, and you have that resistance line built. You see that price is right here. You get into the trade, and you're anticipating for it to come all the way back down to these lows of leg 1. And fortunately, it does. So after making 3 trades, then you can make your profits on the final one, but only if you added 3 times the amount of the first trade. If you've got in at $100, you basically have $100 at risk. That means you lost $100 on the first trade. And then you go part 2, you should double up, right? Because you got to make back your first $100 on the first trade that you lost. So then on part 2, you add and you make $200. So that way you can have the right amount of profit. You lose on that. So then step 3 is you take the same trade, fighting against the trend the whole time. So now you've got to enter into the trade 3 at $600, because now your first trade didn't work, so you lost $100. Your second trade didn't work, so you lost $200. Now to get back that original $300 plus make profit on what you're investing in, you've got to be up to $600 to get that $300 plus $300 back. So you're like, well, that's where indicators come in. I use indicators so that way I know when I'm oversold, overbought, that's when to buy. But you can see right here, it was overbought. So this should have worked based off the indicator. It should have worked based off of the Wolfe pattern, but it did not come back down low enough into our target right here. Now, we also had an overbought right here stow when we got into this trade, and we probably had a divergence, right? We probably had higher stow here, lower stow over here, and so it was showing that the trend was turning, and so that would have been a great place to buy. And so if you set up the rules before the Wolfe pattern with a divergence on a stow. Let's take a look at the RSI. We have the same exact thing. We have the Wolfe pattern set up. We have the RSI overbought right here. And then what do we have? We have the divergence, which got us into this trade, which this trade then worked off of the RSI divergence. And so that's what I want you to be aware of is what can you do with the Wolfe pattern? Because the Wolfe pattern alone is not the greatest pattern of all. There's actually nothing that is really the greatest patterns of all. And that's why I don't like them by themselves. I don't like trading the Wolfe pattern just off of the candlesticks. I don't like using the RSI just off of the RSI. I don't like using anything by itself. I want confirmation on confirmation and whatever you can do to develop your plan so that way you don't take this trade right here, even though it's an absolutely Wolfe pattern setup, you don't take that trade. You wait for the next trade with an RSI stochastics Macd Divergence, which gives you greater odds. The next trade secret is add the LRC. It will give you this resistance line and it will give you this support line. So that way, when stocks are coming down into the support, you'll know where they should go. And so if you were trading this, right, you have a low right here, you have another low right here. It broke that support line. You could have got into this trade and called it a Wolfe pattern, and it's going to come back up into my leg one. And so eventually it hit the target. But my question is, if you could buy, where would you want to buy? Would you rather buy right here on this break, or would you rather get the confirmation of this linear regression channel line down here a little bit lower, giving you better odds? Right here, you had a low RSI, which the trade confirmed. It's like, okay, you can get into this trade, but better odds. Would you rather have a divergence created in your RSI right here? See how price is going down as the RSI is going up, getting a more confirmation that you're making the right trade. So first rule when using the Wolfe pattern is make sure you're against support or resistance. Use the LRC or create your own lines and channels. Next, don't only use some kind of indicator, but use an oddness about that indicator, right? You don't want to just buy when it's overbought, oversold, but use a divergence on that indicator. Now, just confirm that all of these things working together. You'll use the Wolfe pattern, and that Wolfe pattern target also confirm with the LRC, right? Because right here's the midline, and so that's your target anyways. And so it's like a double whammy confirmation. And what other else things you can use off of what? These highs right here. You come back into the highs over here, which you know is going to be resistance because it's resistance and support. All of these things combined will help you be a better trader on the Wolfe pattern or any pattern. So right here we have what? A high. We have another high right here. We have a higher high right here. You can see that it broke the resistance line. So you would anticipate that this right here, you could enter into that trade once it broke down below, and you would take your targets over here off of this leg one. But the problem is, where are you? Well, you're in the middle of a channel. So you're not going to buy that. You don't have a high stochastics or RSI. So you're not going to buy that. And that's what I'm trying to show you is just alone, you're going to see the Wolfe pattern a lot. But can you use other things because you're smarter than these candlesticks? You can see better than these candlesticks. You understand what happens against support and resistance. You understand what happens with a divergence. And so you're not going to just take any pattern, any place. You're going to add rules to your trading. All right, so let's look at some right now trades. So right here, you see that we have a high. We have another higher high right here. We broke that resistance line. This is Apple. We're coming against our LRC line right here. And so we're saying this is a great place to short this stock. We have a confirmation of our RSI is right here at a really premium high. And now what is happening with the RSI? It is coming off of those highs, making a divergence. What did it also do right here on the RSI? I don't know if you know this, but you can draw lines on your RSI. Use this bottom, which is the low. You have a higher low right here. You have a higher low right here. Oh, voila. You just broke those support lines, right? This is a support line of an uptrend. You broke that support line, confirming that divergence. And this is the exact trade that I want you to look at when you're thinking of Wolfe Pattern. You're thinking of support resistance. You're thinking about divergence. All of these things confirmed will make you lots of money. And what are we going to do? We're going to exit the trade down here at the middle line. And so now we just need price to stay below this purple line right here and come into this, and we'll take our profits. If they're at 50% or 100%, it doesn't matter. When we hit that red line, we exit the trade. All right, here we are on DAL. We have a high right here, and then we have a higher high. We have an even higher high with a breakout, and it comes where? Right into this LRC line of resistance. And so then what happens? We have the RSI. We have a high right here. We have a lower high right here, which is a divergence. So we're looking at this trade to get in against this resistance and take it down to this mid-range line, which we got out and made 100% profit. All right, here we are on Sony SNE. We have a high right there. We have a higher high right here. We have a breakout of that resistance line right up against our LRC line. And on our RSI, we have a high and we have a lower high right here, which is a divergence. Enter into the trade once you come back down below this resistance line, and you take your target right down here at this midline of about 67. So we're looking at a 70 down to 67, almost a 5% range. Here's a trade that we're in right now. Okay. TA. It came into this support level right here on the LRC. Then you could see that we were oversold here on the RSI. And as price came down into that support level, we had an RSI going up, which gives us a divergence, which is a second confirmation. We have a low right here. We have another low right here. We have a Wolfe Pattern bounce right here off of this support level. So now you have a double confirmation of support. You have a diagonal support coming from one direction. You have another diagonal support coming from another direction. So we have this upward support on this RLC, and then we have this downward support because we're in a downtrend right here. You see, we came off of these highs. So now we're in a little bit of a pullback, which was a downtrend, and we hit this support line right here. And so that gives us a double confirmation of support, and then it starts taking off. Where do we expect this to go? Well, we expect it to go to $1 million. No, but we're looking right here at this mid-range, right? The next target would probably be these old highs up above it. We're not putting a demand on the market to take us up to these new resistance levels. We're not even putting a demand on the market to put us up to these old highs. We're not even really putting a demand on it to take at these midline highs. What we're just basically doing is, as long as price stays above this line right here, we will make 100% profit. The next ticker we're looking at is MDB, and you can see we have off of these highs. This works both ways all the time. There's tons of stocks that do this. Off of these highs here, we came back down to this other lower band, which is giving us support. You can see that we are in an uptrend because basically that's the direction of this channel. We came into the support level right here off of earnings, and you were undersold on the RSI, but we did not buy. We waited. We wanted our perfect trade, which, following the rules, is a divergence on the RSI. It is taking it at the LRC support level. It is also looking for that Wolfe pattern. And as you can see, we have a low right here. And so if we started our line, you have another low right here. And sure enough, we broke that Wolfe pattern line. We came back up and then retested these lows, and now we're in the trade. And where are we looking to go? Right up here into this midline. We're hoping to start taking our profits right there. We are in a spread trade, and so where break even is below this area right here, right? So we have this trend line coming up, and so our break even is below this channel. You can see that price has already moved off of the bottoms of the support level, giving us a nice cushion so that it can move around a little bit more and we can just let that depreciation take place and collect that premium profit. I hope that makes sense of why I don't like the Wolfe pattern, because you have highs, higher highs, breakout, and then you should expect that this should come back down to the target, and it doesn't. And then it happens over and over and over. All of these highs, these breakouts, and it never quite comes back down to where we're anticipating, which is frustrating because losses are frustrating. And so now with new rules and the Wolfe pattern and an indicator, not taking every high or low, you should become a better trader. I guarantee you, your profits should at least double or triple or quadruple in increase because you're taking less trades. Don't take every trade. I would reduce yourself down to only taking one trade. Let it work. Take one trade at the top, take one trade at the bottom. You don't need 1,000 trades to make $1,000. You only need one good trade plan system. And look at that picture and just concentrate on that one picture. Find the perfect stock that meets all of these rules, and you will see that your portfolio will increase like nobody's business. Thank you for joining us today. Today we talked a lot about divergence, and Fun with ThinkScripts has divergence trading plans for Thinkorswim. So they have RSI Divergence, and it already plots and gives you the arrows of the divergence. And so you don't have to draw it in. And now we have the Stochastics RSI Divergence. And again, all you do is you slide this program into Thinkorswim, and it automatically does it for you. Like this one here, RSI Divergence, see how it plants the yellow and orange lines for you? And so that you are confirmed of, hey, this is a good entry point for me. This is a good place for me to start considering where I'm at against support resistance. Where am I at on a harmonic pattern? You like the Macd Divergence better? Here you go. Identifying a Macd divergence has never been easier. It automatically plots the divergence onto your trading platform for you. And so look right here, you'll see as it goes through any time frame, any chart, it will automatically show you, hey, look, trend is changing.